Blackwell, and I'm pleased to welcome you to this session of the Office of the Public Guardian and Trustee Learning Series for 2017. This webcast is part of the Community and Social Services Learning Series, a joint initiative from the Government of Alberta's Community and Social Services Department. Today's session is focused on the critical topic of credit counselling. We will have an opportunity to answer some questions at the end of the presentation, so please type them into the chat and we'll address them at that time. Once again, thank you for attending today's session, and we'll get started.
Hello everybody, my name is Manraj and I'm a financial educator with the not-for-profit, the Credit Counselling Society. And today we're going to discuss taking control of your finances. So at the Credit Counselling Society, we're a not-for-profit. We provide free and confidential credit counseling, debt solutions, and financial education. Now, before we begin, let's talk a little bit about why we get into financial trouble in the first place. So one of the top reasons we see for financial trouble, the first, especially in Alberta right now, is the economy. There's that unemployment and that underemployment. The second would be that excessive use of credit or using credit to supplement our living expenses. So maybe it's because we don't have a budget, so we end up relying a little bit too much on credit. Or it might be that we haven't saved up for emergencies, and so we end up using credit when we are facing an emergency. The third would be injury or illness. We end up getting sick or we hurt ourselves and we're unable to work. The fourth, and this is a big one, is that not having a budget or having that lack of financial education, because we're not always sure, what are our expenses in comparison to our income. Then we have separation, divorce, or family expenses, as well as failed business or, using credit for business expenses, so not finding a difference between our personal expenses and our business expenses. And then high housing costs. And so often when we're facing financial challenges, it can feel difficult because we don't always know where to turn, and we feel a lot of anxiety about that. So today, when talking about taking control of our finances, we're going to be going over debt in Canadian society, strategies to repay debt, debt solution options, and budgeting basics. By the end of the session, you'll be able to reflect on your personal situation, list 3 strategies to deal with debt, and know exactly where to look to for more help. So as we begin, let's look at how to deal with debt. And as we look at dealing with debt, we want to look at debt in Canadian society. So the current debt-to-income ratio is 1.65, and that level is rising. So what that means is that for every dollar that Canadians earn, they owe around $1.65 in loans. 35% of Canadians struggle to pay their monthly bills. 50% do not have a budget, and 50% report living paycheck to paycheck, and 51% lie about their finances. So let's look at this. 50% are living paycheck to paycheck. And often at times when we're facing debt, we often feel as if we're struggling, we're the only ones that are going through it. But that's half of Canadians that are struggling. So debt and financial challenges, it doesn't discriminate. It doesn't matter whether we're high income, low income, or middle income. That's half of Canadians that are struggling. And so let's talk about exactly how we can manage our debt levels. So we see here that this is what Canadians are facing. So let's look at different types of debt. And a type of debt is payday loans. So payday loans, they are short, small-term unsecured loans that we can take out. They're typically under $1,500. And their due date is, in Alberta, it's within 2 paydays. So typically 2 biweekly paydays. And they're very easily accessible because they do not pull a credit check. Now the challenge here is it can be easy to fall into a payday loan cycle. So they are usually very high interest, and when we get a payday loan, we give them a void check. And that means that when our payday loan is due, they're able to go into our bank account and take out the funds, so that automatic withdrawals. Now, when we fall into the payday loan, let's look at the payday loan cycle by going through an example. Now, say we have Jane, and Jane decides to take a payday loan from payday lender A. So she borrows $300. Fees are around $69, so she owes $369. Then the due date comes up for that payday loan. So we go to, so she may or may not have the money, but if she doesn't, maybe she goes to payday lender B and she takes out $369. Now fees are $85 and she owes a total of $454. Then as the next payday, the due date comes along, she may go to payday lender C. She takes out $454. Now she owes $104 in fees, and her total due here is $558. And so it's sort of using credit to pay credit. And so we want to be aware of the payday loan cycle. At CCS, we often see people who come to us, they might have a couple of payday loans, or they might have 10 plus payday loans. So let's look at just the interest rates for different types of credit products as well as payday loans. So typically for an annualized percentage rate, a line of credit is typically around 6% APR. A credit card is typically around 19% APR. A bank overdraft is around 21% APR. With payday loans, their annualized interest can be up to 599.84%, which is a large amount. And how it's sort of sold is that they show that it's maybe 15 or 23% over a 2-week period. But here we can see when you're comparing apples to apples, you see the different interest rates and how much of a jump it can be. Now, if you or anybody you know is struggling with payday loans, we recommend talking to a not-for-profit credit counseling agency to get a little bit more information on how to get out of this cycle. So as we've looked at different types of debt we have and different interest rates, let's talk about dealing with debt. Often when we're dealing with debt, our first instinct is to run and hide. We want to ignore those creditors. We're feeling anxious, and I understand that. But it's in our best interests to go and speak to somebody and seek assistance sooner rather than later. Because the sooner we seek help, the more options there will be that are going to be open to us. So for example, even at Credit Counseling Society, we've had clients that had they come to us a year earlier, sometimes even 6 months earlier, they wouldn't have had to take legal options to deal with their finances. So when we're looking at our debt, we want to look at paying off smaller debt loads first to be able to free up any monthly cash flow. But when we don't know where to start, we want to come up with a list and make a plan for it. So what we can do is we want to take an inventory of exactly what our debts are. So we want to make a list of it. We want to include exactly where our debt is, which account it's with, our balance, our minimum payment due, and any interest rates for that debt. We want to make a full list of this, and sometimes maybe we don't exactly know where all of our debts are, so we want to order our credit report. And this will help us, once we get our debts, or once we figure out exactly what our debts are, we'll be able to come up with a strategy. So we can order our credit report for free once a year from both Equifax and TransUnion. They're the two credit reporting agencies. We want to order it from both Equifax and TransUnion because some financial institutions may report to Equifax, some may report to TransUnion. They're not required to report to both, so we want to order it from both. We can either go onto their website, so www.equifax.ca or www.transunion.ca. We can go onto their website, print out the document to order our credit report, and then fill it out, send it off, and it'll come to us within a couple of weeks. Another option is that we can call in their 1-800 numbers, and we just follow the prompts. So we can follow the prompts, and then our credit report will be delivered to us within a couple of weeks. Once we've got our credit report, we can see exactly where we stand with all of our debts and then make that list. So when it comes to dealing with our debts, there's typically the numbers will dictate the best fit solution or the options available to us. And these options, they fall into about 3 different categories. So the first would be self-administered. We're handling it on our own. The second would be the debt management program. And the third would be legal solutions, such as a consumer proposal or a bankruptcy. And we're going to go speak a little bit more of these options now. So self-administered, what it comes down to is we either need to increase our income or decrease our expenses. So what we can do here is we can look at tracking our expenses to figure out exactly what our habits are and where we can, where we can save money. we can create a realistic budget, and then we want to allocate any surplus we have towards debt. And we're going to get into budgeting basics a little bit later on in this workshop. Another way to handle it on our own is to talk to our financial institution. And often if we're ever facing unemployment or we are are facing a difficult financial situation again, our first instinct is to sometimes ignore the bills or ignore our creditors. But the sooner we do talk to them, the more options that are available to us. And we've had people that have, as soon as they've been laid off or unemployed, they call up their financial institution, they get that other human on the end, and there have been some financial institutions that will drop down interest rates for a couple of months. So it doesn't hurt to ask. We can look at getting a consolidation loan if that's the best fit for us. And we can look at refinancing our mortgage as well. And I always say negotiate, negotiate, negotiate whenever you can. Ask for lowered interest rates, see if they can waive any fees for you. It's always worth asking because the worst that they can say is no, and the best case scenario is maybe they do lower our interest rates and it helps us out a bit. Another option of handling it on our own is maybe asking family or friends for help. This may or may not work, but it's always an option to consider. And we can also look at selling assets. So it might mean selling some jewelry we have or any assets. If we already have a house that we can't afford, maybe we downsize our house. Or if we have a vehicle that we can't afford, maybe we look into selling that and finding something that is a little bit more affordable. So these are the options of handling it on our own. Next would be signs that we need a little bit more help. Those would include that we're constantly stressed out about money. We're facing non-sufficient fund charges. We're constantly in our overdraft. We're using credit to pay credit. We're fighting with family or friends about money. We're receiving a lot of collection calls and we're feeling that stress. And we don't see any way out except for bankruptcy. So we're facing some of these signs. We want to look into getting more help from a professional. So we can look into seeing a credit counselor. Now we want to go to a not-for-profit that is accredited. We want to find out what sort of training the credit counselors go through, and we want to know exactly what fees are out there. So a typical experience with the Credit Counselling Society is that we're a not-for-profit. We're accredited through Credit Counselling Canada. Our staff all are either going through the process of training or they have received their AFCC designation. And what happens is if somebody calls the Credit Counselling Society, they can call us. Their phone call will be put through to a person within 5 seconds. That's our average wait time. And they can ask any questions they have. And then they can book in an appointment with a credit counselor. It can be either over the phone, just to allow for ease and flexibility. Maybe maybe it's a little bit too far away, but just to allow for that flexibility. Or they can come in to see an actual credit counselor in person. And appointment day would come, our credit counselor would be speaking to our clients. So say we have Joe. He'd speak to Joe and he would go over Joe's entire financial picture. His income, his assets, his liabilities, his unsecured debts, and his full budget as well. And really, the numbers would dictate the solution. And the counselor would then review the options with Joe. So if it's not within his means to handle it on his own, the best fit option might be a debt management program. Now, the debt management program, it's only the right fit for about 20% of people that do come see a credit counselor. What it is that our credit counselors are certified debt poolers. So they're going to pool all of a client's unsecured debts together. They're going to send out proposals to creditors. Creditors will review and accept the proposals, and then Joe would be on the debt management program. He would be giving the Credit Counselling Society monthly payments, which they would then disperse on Joe's behalf to all of his creditors. The benefit to Joe is he is debt-free within a maximum of 5 years, and the creditors receive 100% of their principal payment back. So how this works is that we have an agreement with the Canadian Banking Association where different financial institutions will either drop down or eliminate their interest payments. So it does have an impact on our credit, but there's no permanent record the way any legal solution such as a consumer proposal or bankruptcy would have. The next set of options for the Credit Counseling Society is if the debt management program isn't the best fit option, it might be legal solutions such as a consumer proposal or a bankruptcy. And if that's the best fit option, what our credit counselors will do is they will walk Joe through exactly what that will look like. Then they can provide Joe with a list of trustees that we've built relationships with within the community. We never receive any referral fees from these trustees. So those are typically the three categories of solutions when it comes to dealing with debt. So now let's talk a little bit about managing our money. So when it comes to managing our money and when we think of a budget, we have a lot of different things that come to mind. Sometimes I've heard people tell me budgeting is painful, it's overwhelming, it's not fun. But really, I understand, especially when we're first starting to get into budgeting, it does feel painful and overwhelming. But as we start, when we look at it, a budget, simply put, is a written spending plan. We're spending now and we're saving to spend later. And it's based on our own choices and priorities. And when we really get into that habit of budgeting, that's when we start to feel more in control. And that's when we start, just feeling like we are in the driver's seat of our money. So a budget will include our take-home net pay, our monthly living expenses, and money to be put aside for our irregular expenses, our emergency savings, and our different savings goals. Now, a crucial part of budgeting is being able to track our expenses. Because if we didn't track our expenses and we just thought, maybe let's just see exactly what our expenses are, it's likely that we wouldn't know what all of the amounts were. When it comes to budgeting, another resource that we do have on our website on www.mymoneycoach.ca is a CSS Excel budget calculator. It's completely free. You can download it and then you put in what your income is, you put in your different expenses, and it does the math for you. And for different categories, it gives you little tips and tricks as well as to what different people actually, what percentage of their income they spend on different categories such as groceries. We can save it to our computer, and as we track our expenses, we can review it and update our budget as well, so it makes a little bit more sense to our lifestyles. So as we go into tracking our expenses, we want to figure out how it's going to help us. So I know for me, when I first started tracking my expenses, it was such a reality check. I realized that I like to eat my feelings, unfortunately. So I would end up, after a stressful day, I would end up going to a pizza place, purchasing a huge pizza, and I would eat my feelings. Now, this was okay once in a while, but when I started tracking my expenses, it showed me exactly what my habits were. And my convenience eating, it wasn't good for my wallet or my thighs, unfortunately. So when it comes to tracking my expenses, I thought, all right, if I have a stressful day at work, I need to leave my credit card and my debit card at home and either just take a budget, so taking my cash with me, or I need to take lunch with me. And after I was aware of what these habits were, how much I was spending on coffee and muffins and all of that, I was able to put this money aside so it could be saved. And so tracking, it makes a budget work. It tells us the truth, it shows us what our habits are and how we can change them, and it shows us where we can make our different changes, and it gives us that control. So there's a lot of different ways to track our expenses, and there's no one size fits all, because what works for one person might not work for the other. And I know for me, when I first started tracking my expenses, I tried writing it out, and it worked for me for a little bit, and then I stopped writing it out. Found I'd just end up getting a lot of receipts. For others, it might be a CCS tracking booklet where they just write out where their expenses are in different categories. We have that on our website as well that you can print out. There's spreadsheet or other software. Some people, they like their Excel spreadsheets. I tried that. I tried to pretend I was good at Excel, but it wasn't the best fit for me. Others, it might be using envelopes for your receipt and adding up the total at the bottom. Or it might be a smartphone app. What worked for me was Mint. It's completely free, and that's Mint, M-I-N-T. and you set up your credit cards and your debit cards with it. It's as secure as anything online, like online banking, and it does the work for you. And I'm not gonna lie, for me, that worked really well. So it'd show me exactly what my different categories for tracking my expenses were. It would just tell me what I was purchasing things. The only downside is if you're using cash, it obviously can't track that. So it categorizes all of our different items. So if we spend a certain amount at a grocery store, it'll tell us how much we're spending there. And then we can also set different budgets as well. So we can say, okay, I want to spend this much on eating out, and it'll tell you if you're in the green zone or if you're in the red zone. It's great because of the weekly reports, and I find whenever I look at my app and I see, okay, this is how much I've spent, I either cut back or I'm much more conscious about where I am spending in different categories. When it comes to tracking, we don't want to overwhelm ourselves. We just can start with a couple of different categories. So start with a few categories, maybe groceries, eating out, fuel for our vehicle, and see how much we're spending over a couple of months. And then bring it into more categories, see what habits we have, and see where we can make changes. And I invite you all to join me in a 2-week tracking challenge. When we are tracking our expenses, one thing we want to be aware of is, are our family or our friends costing us? So this might include having adult children or grandchildren that are living at home. Are they contributing to the household through rent or groceries or any other, are they contributing to any other expenses? Are we having regular dinners that are at our expense? And is this manageable? Are they asking for money, or are we giving them too many gifts? And are we spending a little bit too much money when it comes to our family or friends? If we feel like we've made our budget and it's not within our budget, that's when we can have that tough conversation. If it's a little bit difficult for us to say no, we can talk to somebody we trust to help us through that. But we want to be clear about what our budget is and exactly what our new rules are, and we want to be clear about them because we do want to be able to protect ourselves and our finances for the future. If it's regular dinners at our expense, maybe we can compromise. Think of doing a potluck instead, or not having them always at our expense. So that is something we want to be aware of, especially when we do start tracking our expenses. So now let's talk a little bit about avoiding risks. So there is the grandparent scam, where people call a grandparent or somebody claiming to be a grandchild who needs money very urgently. They may claim they were in an accident, they need bail money, or they're traveling and that they're in dire need of money. They ask for the money to be sent over, and then they ask that no other relatives be notified, so it's kept completely private. This is a scam that's out there, and so what we can do to protect ourselves is to create a family safe word. And that way you'll be able to ask for the safe word. If they're able to give you the safe word, you know that it is that relative. So that is something that we want to be aware of that is going around. Then there's also the topic of elder abuse. So financial elder abuse and fraud, it can be bold scams or subtle pressure tactics. So this might include forged or altered wills, might include misuse or abuse of power of attorney, so where we're not making the best financial decisions for the person we have power of attorney over. Might mean misuse or abuse of joint bank accounts if somebody's taking out money that they don't have access to in that joint bank account, as well as identity theft, so applying for credit or different loans with another person's name. So we want to be aware of that. So some risk factors will include having substantial savings and assets, having that ability to gain trust with the person that they are abusing. And we find that there's a strong perception and reality gap with seniors, where they rate themselves the highest on financial literacy, but they score the lowest when they're actually assessed of their financial knowledge. And so that's something that we do want to be aware of. If you or somebody you know is facing elder abuse, if the person is in immediate danger, we want to call 911. We can confide in somebody we trust with what's going on exactly. And we can keep a daily record to document exactly what the abuse is. Then we can also take legal action against them. So that is something we want to be aware of. If we want to report elder abuse, we can contact the Family Violence Information Line. It's 310-1818. We can contact Protection for Persons in Care reporting line, 1-888-357-9339. We can contact the Office of the Public Guardian and Trustee to report any misconduct that we think is going on. So that's 1-877-427-4525. There's also a lot of different resources that we can access, and we can look at the Credit Counselling Society's website at www.nomoredebts.org. There's also different websites like the www.federalretirees.ca, and there's a lot of different resources on the Government of Alberta website as well, especially if we want to look into handling elder abuse and being able to report it. So some of our next steps now include creating a realistic budget, paying special attention to debt, and seeking help sooner rather than later. Even though it might be our first inclination to ignore the bills, to ignore the creditors and the debt, it's better to move forward and try to get help, because the sooner we get help, the sooner we can have the options laid out for ourselves logically, the sooner we can get in control of our finances. And some final words again, the earlier you take action, the more options are available to you. So now you're able to reflect on your personal situation, list 3 strategies to deal with debt, and know where to look for more help. So you can, there's free resources and tools that are available on mymoneycoach.ca. You can sign up for our monthly newsletter or for any social media accounts there. And if you want to contact the Credit Counselling Society, our number is 1-888-527-8999. Great, and now we can open up the floor to some questions.
All right, so the first question we have today is, what are some of the fees associated with the programs that you spoke about today?
So when it comes to credit counseling, anybody can come to us. It is completely free, and they can come in to have their options laid out for them. But when it comes to the debt management program, we do charge fees. So there would be an initial setup fee of $75, and then based on based on what we're paying out to our creditors, we'd be charging a 10% fee at a cap of $75. So say I was Joe and I was on the debt management program. As I initially get onto it, it would be $75. Then say I'm giving my creditors $1,000 every month, then CCS would charge 10% of that at a cap of 75. So it'd be $1,075. They'd keep the 75. We're a not-for-profit. We do need to keep running. But if we do see clients that they're unable to afford the fees, our credit counselors are able to see, exactly what their budget is, everything along those lines, and so they can either waive or reduce the fees.
Awesome. The next question that we have is regarding the debt management program, and we're wondering if it will affect our credit scores.
Okay, that's a great question. So when it comes to credit and the debt management program, the debt management program displays as a 7 on the credit report. So when you're looking at your credit report, it goes from 0 to 9. 0 means too new to rate. 1 means that for your debt, you are always paying it on time. If you're 30 days late, it'll drop down to a 2, all the way down. For some reason, it doesn't have a 6. I don't know if they're superstitious or what's going on there. It'll display as a 7, which is a repayment program. An 8 would be repossession, and a 9 would be something like the items that have gone to collections or a bankruptcy or anything along those lines. So it displays as a 7 for 2 years after completion for a maximum of 6 years. So say I'm Joe and I'm on the debt management program and I complete it in 2 years. It would display for an additional 2 years, so for a total of 4 years. If I took the full 5 years, that it is the maximum amount of time allowed on the debt management program, it would display for the 5 years and then for an additional year after that. And when it comes to the debt management program, while clients are on the DMP, they're required to build up those positive money management skills. So they're required to take 2 webinars, including a Making Sense of Money webinar and any other webinar they want, and these help them build up those skills to be able to improve their credit, and so that once the 7 drops off, their credit is in pretty good standing. And it's not on permanent record, the way legal options would be. So for a consumer or a bankruptcy, that would be on public record, where after it drops off the credit report, anybody, your employer, colleague, friend, can pay a fee and search whether we've gone through a bankruptcy. So once it's off for the debt management program, it is fully off. Great, thank you.
Great. Our next question is, we're hoping that we can get some basic suggestions or techniques on how to begin improving our credit scores.
Great. So when it comes to our credit, there's a lot of different things that we can do to improve. The first would be getting in control of our debt. So if we don't know exactly where to begin, talking to a credit counselor or using different items to bring our debt down is very important. But really, the best way to build credit is just patience and good habits. So maybe just having 1 or 2 credit cards that we use once in a while, and we always either pay the full amount off exactly when it is due. So we need a 1 we need it to pay our minimum payments every single month to hit a 1 on our credit report. What we often see at the Credit Counseling Society is people might have really great credit, so it's all 111s on their credit report for each of their debts, but they're only making those minimum payments, so it's not quite sustainable, and eventually their credit will fall. So what we want to do is just have that 1 or 2 credit cards that we use once in a while. We can make sure we try to pay it off in full. We can look at bringing down our debt levels, because that is definitely what we can do to improve our credit. Great.
Great. So our next question revolves around big telecommunication companies and those high bills. Our person is wondering if you have any advice regarding working with those companies, because a lot of people really struggle to pay those high bills.
So when it comes to working with different financial, like different banks, or?
Telecommunications companies who provide television and internet services.
Oh yeah, definitely. So what we can do is we can always try to communicate with them as soon as we end up facing any financial difficulties. But even just talking to a credit counselor is probably the best fit option to figure out exactly whether we can come up with a plan or even a communications plan with our creditors, as our credit counselors will be able to help us with a communications plan. Great.
Our next question is about those irregular expenses that occur once every few months, and we're wondering if you have any advice about the best way to budget for those expenses.
So when it comes to irregular expenses, there are those expenses that happen here and there. So maybe it's holidays, birthdays. If we even have a Costco membership, that's going to come up annually. Even haircuts or personal care. And what often happens is that we face these irregular expenses, but we haven't budgeted for it. And so we end up using credit to supplement our living expenses. So we want to come up with a plan to deal with them. So we can look at our budget. And if you go online to the budget at the Credit Counseling Society, you'll have a little star beside every irregular expense that you have. So you want to total up your estimations for how much you're spending on each of these irregular expenses. And then you want to divide it by the number of paydays that you have. Then you want to open up another bank account so that and then with every payday, you want to deposit this amount into this irregular expense account. So you're saving up for it. Then you want to track the ins and outs. One thing you want to be aware of is whether there's any fees associated with having more than one bank account. There's some financial institutions that do give you as many bank accounts as you want. There's others that might charge a fee. But I always recommend negotiate, see what they can do for you, or if they can waive any fees.
Perfect. And our last question today is, how can we get in touch with you if we have any other questions or are looking to research any additional resources?
Definitely. So if you're looking for any additional resources or information, feel free to check out our websites, nomoredebts.org and mymoneycoach.ca. If you want to contact the Credit Counseling Society to speak to a credit counselor or just ask any questions you might have regarding your own finances, you can call 1-888-527-8999. And if you have any questions about this presentation, feel free to email me at manraj.waraich@nomoredebts.org. And thank you for attending my webinar. Great.
Thank you, Manraj. I just want to remind you that today's webcast is part of the larger joint initiative by the Government of Alberta called the Community and Social Services Learning Series For more information about the series, keep an eye on your emails, for regular updates, or go to CSS Learning Series CA. You can also follow us on Twitter at Alberta CSS with the hashtag OPGT. Again, thank you for attending today's presentation, and continue to look for updates on sessions from Employment First, the FASD Initiative, and the Alberta Brain Injury Initiative. Thank you.